What's going on, guys? So I just wanted to jump on quickly and make another video, one quickly kind of discussing ERG, how I cost average into ERG, a little bit of just a kind of synopsis on just the concept of cost averaging and how I apply it. I know there's a lot of content out there already about cost averaging, so I won't go too crazy into detail, but I'll just give a brief overview of cost averaging just so we can understand how we're going to apply it and some of the benefits of it and some of the cons of that strategy. So to get into that, let me just find a chart quickly. So this chart will work for us fine. So cost averaging, what is cost averaging? So cost averaging in a nutshell is actually a really simple concept. All cost averaging is when you make multiple purchases of the same asset. And the reason you do that is because you want to essentially level out the curve. So if you can imagine, you buy something at a high price and then you buy something at a low price for an equal amount, then your actual price that you pay for that is somewhere in the middle. So why do I cost average? When do I cost average? And how do I apply that strategy? So cost averaging, in my mind at least, I'm sure there's different opinions on this, but cost averaging is a way to get exposure to something, but without just getting yourself clapped left, right, and center. So imagine you're wanting to buy into ERG, which is something that we've been doing on this channel, and you're watching the market, right? And let's say that none of this market on the right has been printed yet. So we're watching this kind of play out in real time. So we see the market moving and the market's moving and the market's moving. Then we see it start to go up like this. So what a lot of people will do is they'll see this big move, and as you can imagine on the day before this dipped down again, this would have just been one big green bar coming all the way up there. So what a lot of people will end up doing is they see this big move, they go, oh my god, I'm gonna miss out on this move, how will I ever buy my Lambo? And they FOMO all their money in here, right? So, you know, that can work in your favor as a really aggressive strategy if, you know, the next day the thing goes to the moon, or, you know, you just wanted to get that position in there fast, and that is absolutely a strategy, but it's just not one that we're going to be talking about applying here. So let's say in this example, right, we've gone in and we've put, I don't know, let's say £500 here, right? So then the market keeps moving, it goes up a bit more, and we're like, hey, it's printing my tendies, I'm happy about this, I'm gonna be rich in no time at all. And then bang, oh, we have a bit of a dip, and then bang, 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 and then the market comes down. So let's say that we're here, right? So before the next part of the market's printed, right, we bought in here. Let's put a little marker in quickly. So we're gonna put our little marker in, we'll make it a blue line, just so we can see it. So let's go for worst and best case scenario here, right? So let's say we FOMO'd all of our money in here when the market was at its peak because we thought it was going to go absolutely mental the next day. And then a few days go by, it kind of just consolidates a little bit before we have this kind of sharper move to the downside, right? What a lot of people end up doing is they end up buying here in the FOMO, and then the market comes down and they're down a bunch of money, and they're like, oh shit, you know, oh, have I made a dumb decision here? Have I just blown all my nan's life savings? All of that sort of stuff. So what can we do to alleviate that? Like, in my opinion, cost averaging is one of the best ways to circumvent the volatility of the market. Admittedly, it works better on plays that you want to hold for the long term. And, you know, long term in the stock market and long term in crypto, they're kind of different things. But in a roundabout way, they're also kind of not. I mean, when we look at the track record of things like Bitcoin now, it's got some history there. It's got more history than some of the newer businesses on the stock market, so on and so forth. It's a lot harder to evaluate it, but we do know that if you would have bought Bitcoin at any time in the past 4 to however many years since it started, then you would have probably done all right out of it. So it stands to reason that there's potentially some long-term holds out there, and you might want to build some exposure over time. So cost averaging, again, is a great way to do that. So coming back to our example, let's say we put £500 in here, we FOMO'd in here, right? And then the markets come down. A lot of people panic here and they sell, they start thinking about how they've made a bad decision, or start thinking that the whole project's a scam, whatever, right? A lot of that is driven by fear. So how do we circumvent that? Well, what we could do is, let's say it was £1,000 we wanted to get into play, right? We put our £500 in here, so we make another purchase of £500 here. Okay, so what's that done for our cost, right? This one we've bought, and then we're instantly out of the money. We're south. This one we bought, and this is obviously perfect example. You know, I mean, this is a perfect top and a perfect bottom for where the chart's at the moment. It's not obviously going to always play out like that, but just for the case of this example, let's say that was the case. So what we've done now is we've actually created a new line, which we can put pretty much bang in the middle because we've done equal purchases. Let's make this one a wee bit thicker, and then we'll put back to the line. Okay, so we made that thicker, so we can see now, right, this is our current position. So we can go ahead and remove both of these lines because our average cost now is around about here. And you can see when the market, or if the market does turn around, then now it's much easier for us to be in the money because we've brought our average cost down. We're in a much better position on the chart overall, if that's what you're kind of looking at. And you can see as the market starts moving here again, the profit we make from this trade offsets the losses from this trade and also helps to build our exposure. So between these two trades, we've got in for our £1,000 that we wanted to get in, but instead of just getting in at this price and putting £1,000 here, we've spread it across two entries and managed to get a better average of the recent pricing. So you can imagine if you wanted to build a position over time, let's say, you know, a few months, 6 months, you wanted to buy something every month for the next 2 years, then cost averaging is obviously going to be the vehicle that's going to get you there. Similarly, you know, we've had this big pop here. There's lots of different technical analysis on ERG. I won't go into too much of that here, but, you know, it wouldn't be unrealistic for ERG to pull back, maybe pull back down to here, maybe pull back and hit support around here or some sort of move in that area. So, you know, all we're doing with the cost average strategy is just giving ourselves more opportunity. We're flattening the curve. I know I keep saying that. It sounds like a COVID headline, but we're flattening the curve out and just giving ourselves a much better opportunity to get the right price over time. There's bundles of data on this. Obviously, it applies differently to things like crypto because it's not as tried and tested as things like the stock market. But generally, what they say is time in the market beats timing the market. Okay, so, you know, fiddling around with your account too much, taking little profits here and there and trying to pull things out is often detrimental to the growth of your portfolio over time. The devil makes work for idle thumbs. So I'm sure a lot of people have been in this situation where they've bought something, they've gone down on it massively for a period of time, it pops back up, and then they exit at a break-even point. And then the next day, the actual move happens, it goes up 100% or whatever, and they've pulled away their exposure just because they've been exposed to it for so long and they're losing. In those situations, the cost average strategy is going to be your best friend because if you're bullish and you've done your research and you are absolutely confident in your analysis and the future of that project, then why wouldn't you buy it cheaper? Why wouldn't you keep putting money in? If I've bought this stock at this price and it moves down to here, why wouldn't I buy it there, you know? And you can see how this could be a solid strategy over time because we started up here. We've put our second purchase in here, and then let's say the market moves down here, we make another purchase. Well, what's that going to do to our line? Well, just all the time, we're just getting ourselves in a better and better position. So when that big pop does actually happen, we've worked that chart and we're ready. We're ready to go. We've surfed that wave. We've locked ourselves right into as low as we can be, and then we sit and wait and we watch it go up. That's the theory anyway. So how do we apply this to Kucoin? Coming from the stock market, I'm probably a little bit spoiled because these sorts of tools are just kind of industry standard. So for example, if I look at my Tesla position, it does all of this for me. So in my history, you can see all the different tranches. Tesla's just one of those things that I just throw little bits of money to in literally every single day or every other day. But you can see all these position sizes, right? But it does it all for me, and then it averages my price for me, so I know what my average cost is and about where I am on the chart. So it takes all of those positions, it adds them all up, and it shows me this figure here. which was my average price. So the average price I've paid for Tesla with all of those different positions that we've just looked at is £595. Therefore, with the stock now trading at £756, I'm up £163.60. Now, unfortunately, a lot of these other exchanges, because they operate more as an exchange rather than a brokerage, don't provide you with these tools. And if you are building a position over time, then it can be really helpful to just understand where you're at, where your position's at. When do I want to add more? When do I want to stop adding? What is my average cost? If there's a reward system or a dividend or some sort of frequent payout from the asset you own in terms of a passive income, then you might want to know what your cost basis is in terms of, you know, if I put £100 in here, the stock goes up to £200, but it pays me a 4% dividend. What is my return based on what I've paid for it rather than what the stock price is now? Obviously, that's easy to calculate if you've only made one purchase. But once you start getting into the realms of multiple purchases, it could be a little bit trickier to kind of keep up to date with. I've invented this handy little, well, I haven't invented it. I've made this handy little cost average calculator here, which is just going to give us some similar statistics to what we can pull out of traditional stock market brokerages. It probably looks a bit daunting at first, but trust me, it's just a few lines that we have to fill in, and then we're pretty much good to go. So just to give you an example, what I'll go ahead and do is I'll take out this line. If you are coming to use this document, then all you need to do is follow along to what I'm doing, and it should be relatively straightforward. If you wanted to completely zero it just back to a fresh account from the example, then just go ahead and drag all of these up. Important to note that the only lines we'll be editing are these lines and this line here. So there's only in theory 4 things to do, 3 per purchase, and everything else will populate for us. So within a few sort of copy and paste, we can start to get a bit more depth and a bit more understanding on where our investment's at. Obviously, I'm only doing small tranches at the moment, so you know it's probably being a little bit finicky or a little bit anal for the position size that I'm building. But over time, as I start to get more money into this, or similarly, if my position sizes that I were going in with were a bit bigger, it would become really, really important or potentially quite crucial to be able to track your position like this so you can make decisions about what you want to do with your investment. So we've removed that last purchase. Now what we're going to do is we're going to come along to Kucoin and we're going to go to our trade history. Now you can find your trade history in orders, go into spot orders in Kucoin. And then when you're in Kucoin and spot orders, you want to find this option here, which is trade history. And the trade history is just going to show you some stats on all of your recent purchases. You can download this as a CSV file, which might make it a little bit easier. But for today, because I've only got 4 positions, 3 of which I've already put in, I'm just going to show you a copy and paste method. So what's this data telling us? It's telling us when we purchased. It's telling us the pair that we've purchased. It's telling us what we've done, whether it's a buy or a sell. It's telling us the type of order, which was a market order. It's telling us our filled price, which is the price we filled at. So at the time, 1 ERG cost us 0.00345 BNB per ERG. Then we have our 0.2892, which was the amount of ERG that we purchased. And that amount of ERG cost us 0.000997 Bitcoin. Okay, that also includes our fee, so the fee will come out of that. So if we take this full figure, what that will do is it will factor in our fee as well. So we're getting an overall understanding of exactly what we spent versus exactly what it's worth now. So we'll go ahead, double click in this line, and we'll put our cost in Bitcoin into this line. We'll then get our amount purchased. Sorry, I've done this backwards. But we'll then get our amount purchased, which is this line here. On this occasion, it was 0.2892 ERG. So we're going to grab that. And we're going to chuck that in here. Another little tip is make sure that you're double clicking when you go in, because otherwise, if I just try and copy and paste on top, it's not going to add in the formatting. So always make sure that you're double clicking into the cell If you have to, delete the 0 and add your new 0 in. Another thing that we're going to want to take note of is the price of Bitcoin at the time of our purchase. I know this is starting to feel like a lot of admin, but if you're a geek like me, you might find this really useful. But yeah, we're going to make sure that we're keeping a track of the price of Bitcoin at the time of purchase. If not, it depends how anal you want to be here, but we can come to the Bitcoin chart, Bitcoin GBP. So let's just make sure we're looking at the right pair, and we can look at this month, and we can come along and we can get the 9th, the data from the 9th. So on the 9th, it was about 33455, 33455. Format that back to British pound sterling. Okay, and that works out about right. Obviously, I've just taken a rough reading from the day on Bitcoin there. But if you wanted to be really anal with that, depending on how much money you've got in play or how much money you're putting in, you might want to know that exactly down to the penny. And to do that, all you're going to want to do is come into your full chart, check your time code, and have a look at around about 9:30 on the 9th. Take the price of Bitcoin, and Bob's your uncle. So that's populated that in here now. Again, if you wanted to keep adding lines in, then obviously just rinse and repeat that process until you've factored in all of your purchases. The only other thing we need to add in is the current price of ERG. And this is once you've got all of your data in here, the only thing you'll need to update when you come and have a look in here in the future is just the current price of ERG. So to get the current price of ERG from Kucoin, we can come along back to our trading page on our ERG to Bitcoin pair, and we can see up here we've got our price per ERG represented in GBP in this little section here. So we're going to take that, we're going to add it into our chart, the current price of ERG, and that's going to go ahead and update everything else for us. So at the moment you can see we've kind of barely moved from our average. Our current value is 53.79 pence. And the return so far is a whopping 50p. So what is this kind of telling me? Well, for example, it's one of the things it's telling me off the bat, which I can also kind of see from the chart, but it's telling me that I'm probably not going to average back in here unless I really wanted to build my exposure. But I'm actually going to give it a little bit more time. Maybe if we have a little bit more of a move to the downside, you know, let's say for any reason ERG went to $10. I might want to start averaging in a little bit there. If we break back out into single digits, then similarly this will start becoming a little bit more interesting to me, because I know that I'm getting more buying power, i.e. my pound or my Bitcoin in this case will buy me more ERG, so I can build my position at a much faster rate. Again, this is just a general overview of the concept of cost averaging, just to give you an idea of kind of how I apply it. I'll share this sheet in the description section below. I'll share it as a template. Just download it to your own Google Sheets, save it as your own template, and then you can basically pull out infinite sheets of this. It'll also work for other coins as well. I do have another more stripped back one that isn't obviously factoring the Bitcoin. It's just going from the fiat currency British pound. So I'll maybe do another video on that in the future and then post that online for you as well. But because I just wanted to keep everything sort of focused around this ERG position that I'm building at the moment, I've structured this towards ERG and the Bitcoin pair that we're buying in, just so we can keep a much more detailed track of it. If you have any questions on how to use it, have any problems, or want to add anything that you don't know how to add and need some advice, I'm by no means a spreadsheet expert, but absolutely I'll be willing to help wherever I can. So we've had a lot of discussion about a lot of the benefits of the cost averaging strategy, but I just also wanted to go over some of the cons of the strategy as well. So obviously everything has a downside. One of the biggest downsides, in my opinion, of the cost average strategy is that it's a very conservative strategy. That's also by design, because, you know, the whole idea of this strategy is not getting clapped, not losing all of your money that you want to invest into something in the first drop. But also the downside of that is that, you know, if you're averaging into your position, let me come back to the chart quickly. If you're averaging into your position, let's say you got in on the first day, you know, you only put, let's say 20% of the actual amount of money that you wanted to get into that position in, and it pops and starts moving big, then obviously your exposure to that move is much smaller than you might have liked it to have been. You know, there's a few things you can take away from that. Obviously, you're potentially missing out on some of that move to the upside. But also, you know, you're managing your FOMO by at least having some exposure, but you haven't completely put yourself out there and completely at risk. So that's one of the downsides to cost averaging, is that sometimes, you know, market trends might move without you, and then you're kind of stuck trying to catch up. Also, another downside to cost averaging is when to buy more when the stock has already run up quite a lot. So if we pull this chart out a little bit, let's say that we bought here the first time and we're up, I don't know, what would that be? 300% it looks like. Don't quote me on that. But let's say we're up 300%. Now it's very hard then in your mind to start buying something that you're already up 300% on. But, you know, if you're bullish on the project and you maintain a frequent cost averaging strategy, then who knows, you might end up with this dip, and then all you are doing is just building your exposure over time. And that leads me on to one of the other downsides, or one of the other mistakes that can be made on a cost average strategy, and I made this quite a few times early on, is going too hard too fast when something moves against you. So just another quick example. I know I'm moving through this quite quickly, but let's say we go back to our example where we bought the top. Let's say we bought in around here. What I've done before, and one of the ways you can get caught out with the cost averaging strategy, is the market moves a little bit. Let's say we bought in here and the next day it moves to here, and we're down like a small percentage, a relatively small percentage based on the moves. One of the mistakes that could be made is starting to go too heavy too fast. And I call it overweighting. I'm not sure if that's the technical expression for it, but you can suddenly be really overweighted, and then what happens is, you know, I wanted to get £1,000 in play. I've bought here. I've gone ham on all these moves, thinking that, you know, that's all it's going to go down, and then it goes down even more. And then I've got all of my position in play, and we're kind of back to square one, because all of our monies, we might as well have gone in one position, because all of our money is now in play and we've got no more room to better our position. So that's something to be really aware of with a cost averaging strategy, is go slow. The idea of this strategy is it's a strategy that you implement when you want to go slow. If you want to get exposure to things quickly and faster, there are much more aggressive strategies out there that you could use. But certainly this is a more conservative play and a way to build something over time. So yeah, that's just a few, in a nutshell, downsides to cost averaging that I've noticed as I've been kind of doing it. I'm sure other people have some other experiences, so if you do, feel free to put them in the comments section, because I'd love to hear how you guys apply cost averaging strategies, some of the wins you've had, some of the losses you've had, all of that stuff. Feel free to let me know down below. If you wanted more content like this and feel like it's added any value to what you're doing, then please feel free to drop a like and subscribe, because it really helps with the algorithms. And yeah, that's cost averaging in a nutshell. I appreciate I moved through some of that pretty quickly, but there is bundles of content out there on cost averaging as a whole, and they go into it in much more depth than I could. So feel free to have a search around. Again, if you have any questions, ask them down low, and I'll speak to you soon.